and let's make progress. So as usual, we'll be doing a top-down analysis. If you're new here, okay, I like to view price from a certain perspective, okay? The 4 hour to the 15 minutes to the 1 minute. That's my time frame transposition. Okay, but then for some reasons, we'll be starting from the daily time frame today. Because for those who are on the other side, I'll always explain that the 4 hour time frame directly mirrors the behavior of price on the daily time frame. The 15 minutes time frame mirrors the 4 hour time frame, while the 1 minute time frame mirrors the 15 minutes time frame. Okay, so that's the time frame transposition. Okay, so that's why I don't always use interval time frames as it regards what I trade better. So let's just look at the story here. So far, so good. And then we can draw a framework from what has happened in the past week or what has happened prior to this time, and then try to marry that with what we are seeing currently in price. Okay, now there's something about, if you watch my videos, I think the videos I taught earlier this year, okay, some of the videos I did in my beginning. I talked about different types of market structure, the complex structure, the simple structure, okay, so if this is a complex structure, it means that it is very possible that price could just be coming back into this range, right, to induce all of this rubbish inside of here and then continue a bearish leg, or come back to filling this fair value gap and then want to do further upward movement. But then let's not jump into all of that. I am an intraday trader, not a swing trader. So I'll be looking at my EOF with respect to my intraday story. Okay, so currently we are sitting at a positional demand. Okay, a decisional demand on the daily time frame. Okay, this is the decisional demand, and then I'll break down a few things why I still consider this as decisional. Okay, why I consider this as decisional. Decisional means I'm not expecting any heavy price movement from this area. Okay, so the best I think this can do would be to come into this area to fill in daily fair value gaps, right? This daily FVG, and then give us better move to the upside. Why will I be expecting a fill of daily FVG? Because this is a flip zone scenario. Okay, this is a flip zone scenario, grab on liquidity, right? We had this here as a break of structure, right? And then we had this here as the last point of supply that was respected. Okay, and then we had price come back into that range. We had price try to come back into that range, right? And this base here was the last point of demand price created before violating both this high and this high inside of this range. Okay, so it's possible we could get this and then this back here as a flip zone before I move to the upside. Okay, that's just only judging from the story present on the daily time frame. Okay, and then I don't like to deal with that as a whole. I don't like to deal with the stories on the daily time frame independently because I'm not a swing trader. So let's see how we would have approached this. Let's transpose this to the story on the 4 hours time frame. Okay. And see what's happening on the 4 hours time frame. Now, for the guys who are with me on a few sessions I had this week, you remember I marked this out as an area of demand that was still very much intact, right? And then this area of supply still very much intact. But now I have to also introduce this as an area of supply from the 4 hour time frame, right? Why am I introducing this week as an area of supply? Because we had violated this internal range, right? And then we had returned back into this week, into this height, and have begun to see signs of bearishness. True or false? Okay.
True.
So I'm not saying anything out of the blues that you can't see in my charts, right? So yes, we have this internal range broken, and then price had come to react off this level, right? So let us see the transposition of all of this story as displayed on the 15 minutes time frame. Like I said, the 15 minutes directly mirrors the action of the 4-hour time frame. So I can now take this into this, all right? Or even take all of this out and see this as a grab on liquidity, right? And see this as a
change of structure.
So this low as external liquidity, right? And then see this high as the last point of inefficiency, right? So price came back to properly mitigate this block before moving. Okay, I dealt with all of this price action within the week with the guys I had talked to, and then why price had to come back to this point to do this before this move. Okay, I would want to go into all of those details, but then I could if I still have time after explaining my expectational order flow for the week. So yes, we have demand we had just marked very much intact, right? And then try to mirror that on the 15 minutes. Okay, so we have that demand and we have this demand very much intact, right? And price is still currently sitting within this range. So we have demand order flow very much intact. We have supply order flow still very much intact. And then we have price working inside of a range. Okay, we have price working inside of this range. Okay, some what's it called in retail? Some what flag, blah blah blah. What have you? Okay, inside of this range. So it's still possible. Let's see what the week holds and then how price will react from these areas. But then at the moment, this is a typography of the total soup because we still have buyers and sellers inside of a particular range. So hence we can call this a ranging market. But regardless, okay, I am still seeing this structure. I am still seeing this structure, right? This high, this low to this high, to this low, to this high, to this low, right? And we still have this high as internal range. Okay, and then price is still yet to take out this low. However, this low had failed to take out previous high. Okay, so it's a very strong possibility that we may be shifting bearish at this point. Okay, but then we would like to see these lows being taken out before we begin to assume or conclude the authenticity of our expectational order flow. Okay, so the structure is still very much bullish. The structure is still bullish, but we are playing inside of a range that still has demand order flow and supply order flow respected. Does that make sense? Does that make sense?
Yes, sir.
Okay.
Yeah.
So even as we are looking forward to getting the best of price actions this week, we can see that price kept on respecting demand as well as respecting supply. Okay, so we are yet to get a final picture on what price is yet to do. Okay, so we can then conclude because this is a very good bullish momentum from this demand. This is also a very good bearish momentum from this supply. Okay, so we need price to actually decide. But with respect to the order flow currently forming on price, we are bearish. Okay, with respect to this order flow, there's a probability we may violate these areas and then try to see these inefficiencies through. Let me try to trace that back on the 1 hour time frame. Okay, the daily time frame. The daily inefficiency. Okay, so there's a possibility of this range. Let's see that's yeah. Okay, so we could possibly have price, okay, come back into this range and then see further higher price. Okay. Any questions? Any questions as regards it? Let's see the DXY. Let's see the DXY. All right, so we just play around this story we have here, okay? So the DXY, you know the correlation, right? If the DXY is bullish, it means EU should be bearish. And then we have had this as a graph on liquidity, right? I know I sent this expectational order flow to the group. Let me check that very quickly because it looks very familiar. I remember doing that. Let me be sure it was what I sent. Yeah, exactly. Exactly. So I'll share this screen for you guys. New share. So we go. Okay, so I remember sharing this with you guys, right? The same areas, right? We will get price, come back to tap into this range, and then give us some kind of bullish. Can you see my screen? You can see this, right?
Yes, sir.
All right, so there's only going over and on through this. So we'll just get back straight to the chart. I just wanted to be sure I'll share that with you guys. So we actually got to that range and then gave the required reaction, right? So let's see if we could continue in this mind. Okay, let's see if we continue in this mind. Because we're actually getting the required reactions from this area. If we do, then we'll be seeing upward prices for the DXY. And then what is the target? Like we had marked out on the EU, at least to this point. At least to this point. Okay, so at least to this point. Then if need be to go higher, the price action inside of this range will help us determine if we are going to go higher. But until then, I think we are bullish for the coming days into this area on DXY. So if we have this bullish momentum up here in DXY, it means that we could be quite positive with what we should see here with the bearishness on Euro USD back into this range. Okay, does that make sense?
Yes, sir. Yes, sir.
All right. I'm taking a class. Let's see what's on my class. All right, so we could be seeing further move from this range back into higher pricing. But then let's price get here first. And the only reason why I'm concerned about this area is because it has strong characteristics of the flip zone. Okay, it had very strong characteristics of the flip zone. Okay, with respect to market structure and order flow, okay, every other person in the world was actually waiting to get sell reactions from this area, right? And then that failed to hold, which was actually valid, okay? Irrespective of the concept of inducement, this was a nice grab on liquidity and basic breakout structure, okay? So this was a fair inducement high inside of the range that could bet this pricing, okay? That could bet this pricing and then this pricing, but that failed to hold. So it means this has good characteristics of a flip zone that we could possibly be reacting from. Okay, so I'll be looking forward to this as my next major demand as soon as we break out of this range. As soon as we break out of this range. Okay. So I don't give 1 minute order flows or basic expectations on the 1 minute time frame on weekends. I do that after the Asia session forms on Monday. That's if it gives me good pricing. Okay, but until then, we'll just work with the 15 minutes as the minimum time frame, because the 15 minutes is more or less the structural time frame for the intraday perspective or the intraday move. Okay, the 15 minutes is more or less the structural time frame for intraday traders. As far as Euro USD is concerned, okay, that's what I trade. So I cannot be vouching for what you guys trade on whatever player you trade. Okay. Any other question, any question, so we can deal with general questions at the time. Okay, that's all for my speculational order flow for Euro USD. So what am I looking out for? We are still trapped within a bullish range and a bearish range because the demand order flow heavily respected, supply duly respected, both carrying some level of equal momentum. And then we had just reacted off a level of supply only to get back to this previous demand and then we are getting this same reaction from the previous level of demand. Okay, so we totally want to see one of them win. Okay, we want to see one of them win, and then we'll be willing to deal. Okay, but from the pressure I'm seeing, I'm expecting this move. I want this move so badly, so we can come back to build from this range of internal liquidity, and then come back into this range to fuel the daily inefficiencies, and then tap into this flip zone before we now begin to see some certain level of confirmations that may bet higher price into the upside. Okay, so let's see how that goes this week. Any question, concerns you have during the week, we could address and then make progress. Any questions, any questions?
No, sir.
Concerns, contributions? No question, everybody good? Oh, that's great.
I have a question. All
right, please proceed.
Okay, so on your chart, I don't know, there's this particular candle with a green color that appears on your chart. Good evening, everybody. I think I need to say that.
Okay, that's
so there's this particular
color. It's an indicator I used to use just to flip the colors on the chart. It's nothing too extra. I only have black and white at the time, as you can see. It's not some special candle or anything. It's just black and white sometimes feels too boring. So I just like to add some spice.
No, what I mean is the candle, there's this green candle on the black and white chart.
That's what I'm saying. That's what I'm saying. I used to put them on to just make the chart feel a bit colorful.
Oh, okay.
I don't have them on this time.
Okay.
Yeah.
Okay, so I also observed, like I was just going through my analysis this weekend, and I discovered that the current demand zone is a 15-minute leg.
Yeah.
Like, okay. I just want to be sure that
it's a 15 minutes.
I'm correct. Okay. Yeah. Yes.
Any other question? All right. My Sunday calls, like I always say, are for expectational order flows. I said I have something new, and then I can only have something new to share with you when I have questions on a particular subject, and then I think I need to shed more light. Okay, but then if nothing, then it means your guys are having a great time, and then I'm impressed. Okay, so there's no need of extending this. I trade basically Euro USD because I don't see the need to be everywhere. Okay, if it suits your style, there's nothing wrong with trading too many pairs. Okay, so please don't misquote me. There's nothing wrong with trading too many pairs if you can handle trading too many pairs. Okay, but for me, it's not for me. I like to have my eyes fixed on a particular thing. If you wake me up at 3 a.m., 4 a.m., whatever time you wake me up, and want to know what EU is doing, I can boldly tell you vividly what EU is doing at every point. Okay, so, and then I like to keep it that. It helps me stay simple and then focus on a particular thing. So I'm sorry I'm not looking at random pairs and all of that. I'm only concerned about the Euro USD and the DXY. Probably in the future, I'll be adding AUD USD or GBP USD, any of that. Okay, so maybe we could see into some details of white price. Okay, so I don't just make these two shots. White price did a few things last week. Okay, so let's trace last week price action, right? So I think this was 451 to 8 a.m., right? 8. Nice. So 8:15, 8. So this was the start of the new day.
I have a question, sir.
Yeah, proceed.
Right. There's this thing that traders say at end of the year kind of affects price movement. Like we are approaching December.
I can't hear you.
There's this thing affecting traders. Can you hear me?
Yeah.
Okay, there's this saying that many traders say, I've heard many traders say this about forensic pairs, that end of the year affects price movements. Like we're approaching December now, and they say it kind of affects price movements, and there's a lot of manipulations and method. What do you say about that stuff?
Okay. Firstly, I think we use the word manipulations too wrongly. Okay, I don't. The way you use if you're a trader, there's some words you don't use anyhow. Okay, manipulation actually means a particular thing. Okay, in trading. So when you say lots of manipulation, manipulation simply means to take out a high either to grab liquidity or stop order. That's manipulation. So when you say lots of manipulations, I don't really get the concept. But then I think I get where you're driving at. Okay. There are 4 trading quarters: Q1, Q2, Q3, Q4. And then sentimental analysis has it that at Q4, the market makers and all of that are trying to round up for the year. Hence, we will have high volatility and then crazy price actions, okay? Just trying to race up and race down, grab liquidity from wherever they could, and then heavy. That's why you have lots of fundamentals towards the end of the year. Okay, so it's not like it's anything magical. It's not like price will get to, how do I say it? It's not like price will automatically begin to come to demand levels and then violate demands and begin to run, and come to supply and violate suppliers and begin to, you will still trade your basic price actions, just more volatile price, okay? More volatile moves, more speedy moves because of fundamentals. No extra magic happening anywhere. Okay, but then you just have to be careful. Does that make sense?
Okay, thank you, sir. Yeah, it makes sense. Yes, sir.
Okay, because for instance, okay, this here is a flip zone. Not for instance, this here is a flip zone. Okay, this is actually a flip zone. Okay, and then it is possible that since we had begun with this demand story, supply story, we could just continue all the way after we had shifted this, right? Grab liquidity and then grab internal, come for external. We could just come here for internal and then move, okay? But like I said, we have manipulations, that's the definition of manipulation. Stop horns, taking orders off protected highs and all of those things, right? We still have to respect this flip zone only for the sole purpose of grabbing all the liquidity resting below this high, and then to still continue bearish. Okay, so if that's your definition of manipulation, then you're correct. But anything apart from that, I don't know what it's called, but then traders like to use the word manipulation when you don't understand what's happening in price, especially when the move is not going in their favor. Okay, but most times what we call manipulations are basically stop bodies of stop loss. That's what a manipulation is, with respect to the trading.
Hey, bro, I have one question.
Yeah, proceed, man. How you doing, man?
I'm good, man. How you doing?
Great, great. We haven't spoken in a while. I hope all is good.
Yeah. I'm just being busy with the new job and so on.
Sorry, man.
Bro, like my question is, flip zones and breaker blocks. I mean, the candle that creates a flip zone is a breaker block, right? Or is there some difference?
The flip zone is totally different from the breaker block. Okay, I thought I've taught that a few times. The flip zone and the breaker blocks are 2 different concepts. We only have a flip zone when price presents a bullish story and then violates the bullish story, or bearish story and then violates the bearish story. I will show you 2 scenarios. It is only a flip zone when we have a proper grab on liquidity, shift in structure, right?
Yeah.
And we have this, okay? So it means that the price is coming back up. What
Yeah.
are we expecting? Probably to induce these levels, right? And then give us further bearish.
Yeah.
But instead of this to happen, we now have this and then this.
It breaks up.
Okay? Don't forget, we have this here as a what? A grab on liquidity, right?
A grab liquidity, yeah.
And then we have this here as a shift in structure, right? And then further, go back here. Okay, and then we still have this area as internal level of inducement or whatever, liquidity to be cleared, and then price actually gave us some bearish reaction from the range, right?
Yeah.
But then failed to go below this low and pushed higher. The next time price is coming back, we will now expect price to deal from the new area of demand that failed the supply. So this is a flip zone scenario.
Okay.
Okay. The reverse is
Yeah.
the case if we are looking for sales. If we are looking for sales, price must present a nice buy narrative. And then after giving us reactions, violates the narrative. Okay. Now, there is also a variation to the flip zone I was supposed to teach last week. Thank you for this question that I forgot to teach. Okay. I will just introduce that right now. Now, sometimes we may have price give us this narrative. Let me shift this up a bit. Nice. Okay, so sometimes we may have price give us this narrative, create grab liquidity, break structure, come back to internal liquidity, break structure, but then aggressively clear the move. If we have price aggressively clear the move, there must be some sort of inefficiency inside of this range. Okay, in those kind of periods, price will come back to respect the last week inside of the inefficiency. Please mute your
Sorry,
mic.
I think
Someone
is on.
mute your mic. The last week inside of the inefficiency before moving on. I think I had saved.
Please, can you take that again?
Okay, if we aggressively take out the area, after breaking first and second structure, price is most likely to come back, not to the base, okay, but into this inefficiency, the last week below the inefficiency, and then give us further move to the upside, okay? I'll show you chart examples very fast. Okay, I had saved a few intending to talk about it, but I forgot. I just have 10 minutes for this. So we can, so I will just share my screen. And which of my library do I have there? Liquidity. All right. So you can see this, right? Can you guys see my screen?
Yeah.
Okay, so this was the
Yeah.
graph on liquidity. We had already broken structure, right? So we're expecting price to come into this range to give us some kind of sell move, right? But that failed to happen, okay? We aggressively escaped the area. Where did price come back to? The last week leading to the inefficiency, tap right in and what? And bought, right? Can you see the price inside of here? So let's see another example, and then you can go back to look for that in your chart. So another example, grab on liquidity, shift structure, aggressively escape the area. Where the price come back to last week inside of this inefficiency, tap below it to grab internal liquidity, right? And then what?
Yeah.
To the bullish, right?
Yeah, wow. I've never seen this before.
Okay. Okay, one more, grab liquidity, right? You can see this, right? Shifted structure, continued bearish, and then aggressively escape the area. Where the price come back to the last week before the inefficiency, and then tapped in, and then what? And then bought.
Okay.
Okay.
So it is the
last
week before the
last week inside of the fair value gap. Yeah, the last week before the fair value gap. This is the first fair value gap, right? So we are dealing with the week before the first value gap, but the candle low before the fair value gap.
Yeah.
Okay, so you can go
can
back
you send,
yeah.
Can you send this to charts on the group?
Yeah, I will.
All right,
Hello, sir. Hello, sir.
Yeah, I can hear you.
If I can ask, sir, what make you take this trade? This one here.
What make me take this trade?
What I learned, this trade. What I learned so far is that your zones, it's either the big structures or they cause flip zones. So this one I'm saying here, there's no big construction, there's no flip zone.
I don't trade order blocks. I trade liquidity. I don't know how often to say that. Okay, this is a grab. I cannot mark this screen because let me see if I can. It's a screenshot, but let me see if I can. No, I can't. Okay, but then if you can see clearly, this is a grab of external liquidity, right? From this high. Can you see that? if we have a line to this edge, it's a grab of
Okay.
external liquidity, right? After taking external, we'll come back for what? Internal, right? After internal, we are targeting the next what? External. So I trade liquidity, I don't trade market structure. I trade market structure with the views of liquidity or with perspective of liquidity. Okay, so when you say with what we are taught, please always be open to learn what I am teaching at the same time, so you don't miss out on what we are doing.
I have a question on that.
All right. Please.
Yeah. So, and I think this is where I'm struggling with why that specific liquidity, because it seems like there's liquidity below.
Why
you know,
this specific
below-
liquidity?
Yeah, I know it's, I mean, that's before the inefficiency, but, and is that probably why? Because if you look underneath this, I see some liquidity and I'm wondering why I
There's
didn't
still
grab.
inefficiency here. There's still all of that here. There's still, right?
Mhm.
Now, where is the range? Where is the bullish range we are working with? You see this high? You see this high, right?
Correct.
To this edge, okay? This whole area is a zone. From this high that grabbed liquidity and broke structure into this high here is a single zone.
Okay.
Okay, so if price is coming back for a liquidity, it will come back to the liquidity inside of this zone. It is the closest liquidity to price. Now, that is because on the contrary, where do you think smart money traders will be looking to buy from? Your extreme, right?
Yeah, incorrect.
Or marking this out as an order block, right?
Mhm.
Another question I asked, do you think the market makers are interested in giving you money?
Not at all.
Not at all, okay? They're only concerned in taking liquidity. Liquidity is what they're after, okay? If they're coming back here, they're coming to tag you along in the move, and they don't have orders inside of this range. Another theorem we should be concerned about. You see these highs? I cannot mark a line on this area, but I'm certain that this week will touch this high clearly. This particular high would be touched by this week. If I can extend the line to fit in, I'll try to trace that price action. It should get to this week. It should get to this high, okay? Which is the last point that they used to force price down before this bullish movement, okay? So the essence of all of this move furthermore was to come to mitigate or grab out partials or close this position so they can further push price upward. Okay, so this is our dealing range. This is our dealing range. From this low to this high is our dealing range. So we are concerned about the price action inside of this range. Okay, so this was my first point. Now, if you look at my stop loss, I had still covered this area with my stop loss, right? Because it is still possible that they will want to trade off this breaker block. So I had these areas covered still with my stop loss in case they choose to further come
One more thing, sir.
to this block. Okay, but regardless, I am still looking forward to them reacting off liquidities, off my liquidity levels than regarding off order blocks. Does that make sense?
Yeah, that makes sense. So another question is just to add to that. So does your stop loss cover that your 10 pip stop loss requirement that you have?
I think this was a 7 pips or 8 pips.
Okay.
Yeah,
So it falls within.
Yeah,
Okay.
it falls within. Yeah.
Okay.
Yeah.
All right. Thank you for the clarification on that.
You're welcome. Any other question?
So I think this line here.
Which
So
one?
I need the picture again.
Okay.
The picture again, yeah. So I think this dotted line here, I think it's for liquidity, right?
Yeah, yeah.
It's missing. So I don't understand. I did not see liquidity here. So I did not see
Yeah,
anything. So I'm confused. How you said this liquidity here?
You don't see liquidity.
So I'm
here?
confused how you picked out liquidity in that area.
You don't see liquidity here?
I did not see it. Yeah, I saw it here.
You can
No,
see
sir.
liquidity
I
here,
did not
right?
see it.
But you see liquidity
No, I did
here.
not. Yeah, I saw his grab liquidity there.
Where don't you see? Where don't you see? Here.
Yeah, yes, sir. Yeah.
Okay, how do you know there's a liquidity here? What did you see here before you call this a grab on liquidity?
And I saw that this where this arrow, there is a bearish candle there.
Okay, is that what makes it liquidity?
Yeah, and it's grabbed upwards.
Okay,
That means price retraced up there.
you've not been following up with my courses properly. Okay, Mr. OC, are you on the call?
Yeah, I'm here. Mhm.
Okay, one of the ways by which price presents internal liquidities, please, can you answer that?
One of the ways which what?
Price presents internal liquidity. One of the ways we can have internal liquidity on price.
One of the ways you can probably know that, but it's probably the way you're asking it, the way the question is being asked.
Okay. How do I put it? How do we identify internal liquidity on price in price?
Internal liquidity in price. I mean, I can show you. I just can't really describe it. So
Okay, I need somebody that has the answer.
Imbalance.
Imbalances, inefficiencies. That's what we're looking out for. Okay, inefficiencies, imbalances. Let me zoom in on this. You guys, you need to get this, guys. Okay, the only reason why I'm concerned about this area is not because of a high. This is an inefficiency. Okay, the space between this candle high to this candle low is an inefficiency. That's what I'm concerned about. Okay, now we have all this space sitting inside of this area. It's also an inefficiency. Price could tap into that and move. That's what I'm concerned about. Does that make sense? Does that make sense?
Yeah, that makes sense. I mean, that's where you say the inducement before the
Exactly.
the inducement before the imbalance. Yeah, I understand that.
Exactly. That's the theory. That's just what I'm looking out for. So when you say you see the inefficiency here, when you say you see the liquidity here, if you are looking at the high because it's a high, you're still wrong. Okay, internal liquidity will first be delivered as inefficiencies before other blocks. Okay, when I not consider old highs or old lows, I'm looking for externals.